Hello traders, Gary Wagner here at just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 4th day of June 2019, and this is the Daily Report for Gold and Silver. Statements made by Fed Chairman Jerome Powell today were highly supportive of both U.S. equities and to some degree gold pricing. In fact, both of these markets, which are usually moving in opposite directions, move to higher ground in tandem. Of course, the equities move substantially higher with S&P 500, the NASDAQ Composite, and the Dow all gaining in excess of 2%, while gold only gained a little bit shy of 0.2%. That being said, a rate hike would boost both equities as well as the precious metals, and if in fact that comes to pass, we would see a continuation of this current rally in gold as well as a strengthening of U.S. equities. However, there are some things that we have noted in the market over the last couple of days that has prompted us to make a recommendation to move our stops higher. We'll talk about that as we pull up our technical studies, but first to the price board. Traders, we did see gains across the board with the exception of platinum today in the precious metals markets. Gold currently up about $2.30 at $1330.20, a 0.17% gain on the day. And what we have noticed is even though gold had a higher high than yesterday and a higher low, we have seen some signs of either consolidation or the potential beginning of a slight pullback or correction. Silver did gain about 0.5% on the day, and silver prices closed at $1481.47, and that is an increase of about 7 cents. As I said, platinum was the only precious metal bucking the trend, closing in essence unchanged, down 80 cents at $820, but it was palladium that was the big mover, up $27, a gain of 2%, and currently fixed at $1342. In terms of gold being the most expensive of the precious metals, which occurred yesterday, if anything, that was short-lived. Let's take a look at our technical studies. So traders, in light of U.S. equities on fire today, with all of the major indices trading up well over 2% on the day, the fact that we saw higher pricing in gold was significant. It was statements made by Jerome Powell, coupled with statements yesterday by James Bullard, which of course is the president of the St. Louis Federal Reserve, in which they both alluded to the potential for rate cuts later on this year. And that would be supportive of both the precious metals as well as U.S. equities, although equities fared much more substantially than gold pricing did. In terms of percentage gains today, equities exhibited a 10-to-1 move in relationship to what gold did today. Gold up just shy of 0.2%, and U.S. equities in terms of the S&P 500, Dow, and NASDAQ Composite all showing gains in excess of 2%. But let's take a closer look at gold. Although gold traded to a higher high, slightly higher than yesterday, and definitely a higher low, what we saw was that in essence we have a doji, and that doji is in the star position after having some extremely nice gains over the last couple of days. If we look at the last two candles, meaning yesterday and today, we can see that we have some definitive resistance up around these recent highs, which occur roughly at 1334, and that can indicate one of two things. Either we could see the market simply consolidating at this point before returning to rally mode, or this could be signaling the beginning of some kind of, I believe, would be a mild correction, a little bit of a pullback after this parabolic rise to the upside. That being said, I am recommending that we trail our stops up once again today. Now, the low today was 1324.70. And the last of course, was 1330. I am recommending that we move our stop to 1321.13. That will lock in a little bit more profits. Of course, we're long at 1293. If the market does pull back, we'll be able to capture most of the profits since we entered the trade. If it consolidates and moves higher, we might still actually be in the market. And I think that that is the most prudent move for the scenario that we're looking at, because traders realize one thing, and that is tomorrow, if we get a down day in the market, and that down day is significant, meaning a red candle with a lower high and a lower low, it would be a variation off of a three-river evening star. And if that is the case, that would certainly signal some sort of correction is imminent. So, as I said, let's go ahead and trail our stops up and then see what tomorrow brings. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.